All right. Today's SPY was up 0.39%, and today was a perfect example of letting the price action do all the talking. Because before the market even opened, I was looking at the NQ hourly and the ES hourly, which are the futures contracts for the NASDAQ 100 and the S&P 500. And clear as day, you can see there was a double bottom, and I said that this would be an attempt for the bulls to reverse the downtrend and to also keep an eye on the SOX daily chart, which is the ETF for the semiconductors, because it was also at a very critical bounce or die support level, meaning that if the bulls were going to show up, we were going to see it through the double bottom and a lot of the semiconductors. And because we are unbiased price action traders and we let the price action do all the talking, we didn't take a single short trade today, even though in the short term we were looking for lower prices. The price action was telling us it wasn't ready yet and that we were likely going higher today. So as you could tell from this chart, this is exactly what played out, and the double bottom worked out perfectly today. And that is how you be an unbiased price action trader, is you do not care as a trader if price moves higher or lower. You are simply looking for a way to profit from what the market is doing. And that is how you let price do all the talking and react to what you see on the chart. The only way to be a truly unbiased price action trader is not caring if the market goes higher or lower and not having a predetermined bias on what you think needs to happen. You truly need to let the price do all the talking on the chart. So if you want these intraday updates and my technical analysis throughout the day and before the market opens, that is what you're getting in my Discord server, which you can find out how to join by clicking on the link in the description of this video. All right, so looking at SPY today, we can see we did close back above the daily 5 EMA, but we are still below this resistance at 547, and I do believe we are in a trading range between 541 and 547 until we get a breakout. What a trading range means is that bears and bulls alike are going to be profitable as we ping pong within the range, and then once we get a breakout, I'm looking for a return to a trend. So for the bulls, they are going to want to see a break above 547, and then above 547, I do think we will see another brand new all-time high just below 555. But if the bears get the breakdown below the range, that is going to be the breakdown below 541, and then we should easily close that gap at 537. So it is possible we stay within this range, and I think there's a good chance we do, because we do have the PCE data on Friday, and that will likely be the catalyst that will break us out of this range, either to the upside or the downside. But until Friday, there is a good chance we just chew time off the clock and stay within the range. So look at that range between 541 and 547, and then the bulls need to break above 547 and the bears want to break down below 541. I think that's a very easy way to trade this market. Let the price do the talking. Whether we break above the high of the range, then we're getting bullish, or if we break the low of the range, we need to start getting more bearish. Now just keep in mind, even if we break the bottom of the range, we're only looking for about 537 before we're back to some critical support. And then if we break 537, then we are likely coming all the way down to 531. So there is some very clear levels to manage your risk from. Whether you're going short or long should not matter. I think you're going to do fine in the market either way. And just keep in mind what I told you about letting the price do all the talking with that early morning double bottom. There was really no reason to be bearish today until that chart broke down. And all that chart did was continue to prove the bulls were in control today. And as you can tell, the bulls continue to push all day long. So have a trade plan and be prepared for the bull breakout or the bear breakdown. And if you want to trade the range until we get the breakout, that's going to be completely fine as well. On the NASDAQ 100 triple Qs, we were up 1.14% today. And as I mentioned in the introduction, we had that NQ double bottom off of support overnight. And then we did push back up to the top of the range at the resistance at 479. And now that we're at this resistance, this is going to be a very important test for the bulls, because if they continue to push, we will likely get into the 480s. And even if we get to the 480s, which could be all the way up to 484, keep in mind what I told you about the possibility of a lower high before we come down and fill these gaps. So you need to be very, very agile here and be ready to manage risk very quickly, because even though we are bouncing, it is possible the bears are letting the bulls push it to a lower high before the next rejection and the next lower low. The next lower low would easily take us to fill the gap at 468, and then below that, I think we would go all the way down towards 460 to 455. So be flexible here. We need to get all the way back above 484 before we're looking for a brand new all-time high. And if we do get above 484, I think we'll actually push as high as 500. However, I'm not saying we will go to 500 until I see price breaking above 484, just to make that very clear. So there's really no reason to explain how we need to be bullish in a bull trend. So it's the easiest to understand how we can go higher. I would much rather you spend more time focusing on how we could go lower, and that would be the lower high rejection below 484. So just be aware of that and make sure you're ready for it. On the Dow Jones, we were down 0.75% today, and this is really just a cool down because as you can tell, we were outside that upper Bollinger Band, and I did tell you the Bollinger Bands were squeezing, and it would limit upside potential in the price action in the short term. But now that we're getting a pullback from the upper Bollinger Band and we're down near the support at the breakout at 391, I do believe it's possible the bulls continue to push here. And in the Dow Jones, if the bulls hold 391, we are looking for a brand new all-time high right around 402. So keep this in mind because this is a bull trend sitting at the bull breakout retest, and this is where you get those low risk long entries. So I don't believe the Dow Jones bulls will have any trouble showing up here right around 390 to 391. If the bulls do not show up, look for the bears to try to push it lower towards 388 to 387, and that should be another very strong support zone. On the Russell 2000 IWM ETF, we were down 0.33% today, and we did close back down below all of the moving averages yet again, and we still do have a bear trend, so that it is possible if you're waiting to get bullish to simply wait until we get the bull breakout above 203 to 204. Now, if you do not want to wait for the bull breakout, then you're taking the low risk entry off of the support zone at 198 and 199. Understanding that if we break down to a new low, we are likely going to 195 and then 193. On the ARKK ETF, we were up 0.21% today, and we still have the bear trend, and we're still risk off below 45. And while we're risk off, we're looking for lower supports at 42.4 and 41. On the VIX, we were down 3.75% today, and the VIX is continuing to crush, so we are starting to get a bounce here. And if we continue the bounce, expect the VIX to continue to crush down towards 12. Now, I do think in the lower high scenario, before we go lower, we're looking for a higher low in the VIX, so it is still possible the VIX spikes up towards 15 to 18, but again, that is going to require a break of critical support and some massive panic selling. On Bitcoin, we're currently trading right around 62,000, and we did hold that support at 58,000, and I told you if we did hold that support, we would likely get an oversold bounce below the lower Bollinger Band to bring us back up towards 64,000. And if you want to be even more conservative, then just look for a bounce at the -5 EMA at 62,600. We're going to reject from either of those if we're staying in the bear trend and come back down to 58,000, and if we break 58,000, we're looking for a price target down below 53,000. However, it is possible we hold this support and we do continue to go higher from here, so we will want to see a higher low, higher high breakout to get more bullish. On Nvidia stock, we were up 6.76% today, and this was one of the stocks the semiconductors needed to bounce to save the SOX ETF from breaking critical support, and the bulls did show up in a big way above the gap fill at 116. However, I will warn you very quickly, while this is still a bull trend and we are back above the rising 20 daily moving average, this is going to be risk off immediately if we break down below 122 yet again, because it's just going to be a very simple bounce to a lower high before the next lower low, and we could continue to go through this blow off top correction. Now, if we do not break down below 122, then it is completely possible we just continue to push higher and go into a more bullish scenario, and that's why you just let the price do all the talking. You could stay bull above 122 and then just get risk off below it. Again, I don't care which one happens, just be on the right side of the trade, and above 122, it is possible the bulls take back over control and continue to push higher. So don't rule it out, but just be aware if we break down below 122, that is another risk off look, and we're likely still getting a deeper correction. On Tesla stock, we're up 2.61% today, and this chart is starting to play out very well here because you can see we had a very strong bounce off of the daily 5 EMA. We have the bull trend. We're closing back above 185, and we should be well on our way higher towards 207. On the way to 207, do look for a potential resistance right around 197, and I think this is a no-brainer. Stay bull above 178, and that is your risk level if you're a bull. On Apple stock, we're up 0.45% today, and we're still closing down below the 5 EMA. We're still down below 212, and below 212, I think it's prudent to stay risk off because we could likely go lower towards 204 and 198. If you want to get bullish, just wait for that break above 212, and then we can start looking for higher targets. So jumping back over to the S&P 500, today was a perfect example of letting the price action do all the talking and reacting to the price action on the chart, because that very early double bottom told you not to bother trying to short the market until the bears could prove they could break it lower and lose a support zone. And the bulls really did do everything they needed to do today, and now with IWM and the Dow Jones sitting at support, it's possible the bulls continue to push for the rest of the week. So just be flexible. You should be prepared for any scenario, because as an unbiased price action trader, you do not care if we go higher or lower. Your job is to be on the right side of the trade and to manage risk and to try to maximize your profits by putting yourselves in the highest probability trades with the best risk reward setups. That is how you become a profitable price action trader. There is no cheating or any other way around it with trying to predict the future. While it's okay to have a speculation, price action on the chart rules everything. And if the price action is going against what you think is going to happen, you need to adapt immediately and continue to move like water. Moving like water means you are in and out of a position the moment you know it's wrong so that you keep your losses small. And if you keep those losses small and you let your winners run, you are going to be a very profitable trader, even if you're only winning about 50% of the time. As long as your winners are way larger than your losers, you are going to be a profitable trader in the long run. So focus on everything that I'm teaching you to do on how to be a disciplined price action trader and how to manage risk around these critical levels, and continue to build out those trade plans so that you're reacting to price and not your emotions. If you want access to all of my intraday updates, technical analysis, and my trade ideas, that's going to be in my Discord server, which you can find out how to join in the description of this video. With all of this market volatility, there's going to be a lot of trade ideas, so now is a great time to get involved in the Discord community. So thank you for watching, everybody. I hope you're crushing this market. And as always, I will see you in the next episode.